Hi, this is Mike Swanson of Wall Street Window. I got a really special guest today. I got Nick Santiago of InTheMoneyStocks.com. How you doing, Nick?
Hey, Mike, how are you? I'm doing great. Thank you very much.
Yeah, it's good to talk to you. It's always good to know what you're thinking about the market. It's been a little while since we last talked, so I'm really curious to see what you're thinking now because in April and May we saw the market pull back pretty sharply, real quickly. And, of course, last month it bounced back up. And so far this month it's come off, although yesterday it was up pretty good. And today everyone got to listen to Ben Bernanke talk and hear what they wanted or didn't want to hear, I suppose. So real curious, what's your take on the market? What do you think is the real trend right now?
Well, right now, I mean, the market's on this Bernanke high. So every time this guy gets to speak or he has an anticipated speech, everyone is waiting to hear if he mentions another quantitative easing. The fact remains he can't do another quantitative easing at this time because he'll send the markets into a tailspin. The Middle East is already battling inflation. China's battling inflation. Europe is trying to just stay afloat. And then you have India battling inflation. So right now he's kind of handcuffed. If he's going to pull off another QE, he has to probably wait till the end of the year. But he's going to dangle the carrot out there every chance he gets. And, you know, the market obviously will bite on it every time. So it makes for great trading, and that's all it is. Traders should not really be impressed by this move from the June 6th bottom because it has no conviction behind it whatsoever, and they're coming up into major resistance levels very, very soon. So I wouldn't look for all that much left in this market.
Well, that's interesting. That's kind of what I'm thinking too, myself, that I think we saw a correction begin in April, and I don't think it's really over, and we're just getting like a counter-trend rally right now. However, I do think it can go up. Let's see what you think, but I kind of sense it can go up a little bit more just over the short term because earnings are starting to come out, and typically the market seems to go up at the beginning of earnings season at least, and then start to sell earnings reports. So that's kind of what I'm looking at. And, you know, as we speak right now, Intel has just reported earnings, and it's trading up for the moment. So hopefully that'll gap things up tomorrow, I suppose.
Well, you got some earnings out there. Wynn Resorts is also trading up. But don't forget, the stock has just been slaughtered here. I mean, think about it. From the top of May, the stock was trading around 29 and a quarter, you know, now down to 25, and it's as thick as a telephone book with so many shares outstanding. So just realize that, you know, these stocks are coming off of really depressed levels. You know, Wynn Resorts is another one. You know, stocks at trading around $95, and it just came out with earnings now trading up around $99. But the truth of the matter is they're all headed lower. This is just an inflationary. We don't even trade stocks anymore. We just trade an inflation creation by the central banks. I mean, that's really what it comes down to. Today the markets were up, as you said earlier, with Ben Bernanke testifying and Humphrey Hawkins' testimony. But the reality of it is, you know, they're going to dangle this carrot out there, and the market will only bite so long, and then, you know, the institutions will sell this thing.
Well, if you look at Intel, that chart, just like you said, it's pulled back quite a bit, and, you know, now it's up. That kind of looks like short covering action in a certain sense.
Yeah, you can make a case for some short covering. You could also make a case for, you know, Intel trying to hold a double bottom level from the June 4th low. But reality is that the stock still looks terrible here. There really is no real conviction behind this. So we'll see how it shakes out tomorrow. Don't forget also, Mike, this is options expiration week. So on Friday we have the expiration coming. If there were too many puts bought on this market last week and early this week, you know, the institutions are going to take the stock the other way. They never let the small retail options trader ever capitalize in the market.
Well, when you say you think things can pull back, are you thinking that it's a pullback within a sideways type of long-range trend, or are you thinking it's like this is really a bear market and we just don't realize it?
Well, I think what we're going to have now is just another flush lower, and then as the sentiment becomes so bearish, we'll get that inflationary rally that that the institutions are praying for. And, you know, Ben Bernanke never fails to deliver. He's like the gift that keeps on giving. He just keeps giving more quantitative easing. So, you know, the drug addict will eventually get what he wants, more drugs. It's just going to take a little while here. But I think that we're going lower before we go higher, ultimately. In the short term, you know, we're bouncing up a little bit more. But I think this is the final thrust before the next leg down in this market. And then ultimately, we'll get that inflationary pop that everybody's, all the institutions are begging for.
Yeah, that makes a lot of sense to me. The way it looks to me is that, the exact timing is tough to tell, but once this current move from June ends, we'll probably decline into the fall or something and get a real panic washout in the market, which I don't think we saw in June. In fact, right now,
definitely not.
The VIX
I agree.
That's what made me skeptical about thinking that this is the start of some giant rally. And, like right now, the VIX is at 16.5, and the market barely had to go up to make it drop that much. That's kind of troubling to me.
Well, the VIX is setting up as well. The lower the VIX goes, the more this VIX goes down, the bigger the pop's going to be in the VIX when it does happen. But I don't think we're that far off. In fact, I think we're weeks away, if not sooner, to another leg down in this market, a severe leg. Then the bearish sentiment will come in, and the Bernanke will have to take action one way or the other. I don't know what he has up his sleeve, but cyclically, the cycles tell us that later this year we'll get, some kind of inflationary rally.
Well, one thing that's puzzled me for really the past year is gold has acted pretty poorly, especially gold stocks. And if we're going to get the inflation to start to come in the market, you would think that they would start to hold up or show some sort of strength, and they haven't done that yet. Is that something you're looking for to change at some point?
Absolutely. Gold is one of the greatest, if not the best, indicator of inflation and deflation. And right now it's telling us the market's about to deflate. Later this year, I think gold puts a nice leg in, a nice bottom in, and then we're going to get that big inflationary rally. But gold and the stock market is synonymous. When gold is not rallying up with the stock market these days, it is telling you that ultimately the stock market's going to deflate again. It's the greatest indicator of deflation and inflation that we have at this time. The Fed doesn't print M3 money supply anymore. They said it doesn't fit into their budget. So if that's a crack up or what. But, think about it for a minute. Gold is what we have right now to tell us the market's going to inflate and deflate. And right now gold looks horrible. Gold miners look horrible. And, maybe they'll bounce a little bit from here because it's options expiration. Maybe we could bounce up for next week or two, but ultimately they're going to make one more leg lower, and then I think it's going to be a real good opportunity to buy gold. As you know, when the Fed prints money or does another quantitative easing, whatever they want to call it, gold is going to take off like a rocket ship.
Well, as we wrap up today, could you let people know what you provide and where they can go to get more information from you?
Absolutely. Come over to InTheMoneyStocks.com. We offer a 7-day free trial to our intraday stock chat. You'll see all of our scalp trades. Also, we'll do a lot of swing trading in there as well. If you're an investor or a swing trader, you may want to try out our research center. In that, you'll get all of our nightly videos, our nightly setups, all of our cycle work, and you'll see everything that we're looking at in this market on a day-to-day basis. And also just come over and check out the site. We put a lot of free content on our Rant and Rave blog, and that's there for everybody to see.
Well, thanks for taking the time to talk to me and all my listeners, and hopefully we'll do another interview sooner in the future instead of later.
Sounds great, Mike. Thanks for having me.